Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 22nd of October 2021 and we're producing our Friday morning gold and silver price update forecast and daily news. This morning we can see gold and silver furthering their rise amongst headlines of a disastrous winter ahead. So let's take a look. Welcome to Illuminati Silver. It's Friday, the 22nd of October 2021 at 10:11 a.m. GMT +1. The weather today, or at least the sky, is lucent. Yes, lucent. There are some very mild clouds, but they can be seen through. So we have a lovely blue sky with a few white, reasonably spaced clouds that are translucent. It's a real word. What can also be seen through is the pending crisis this winter, at least according to Bloomberg. A winter crisis raises the prospect of energy blockades in Europe. Think everything's expensive now, wait until you see what's next. And Europe's top two economies sound alarm over absent supplies. So let's take a look at these three headlines. Think everything's expensive now, wait until you see what's next. Consumers around the world are about to get socked with even higher prices on everyday items. Companies from food giant Unilever plc to lubricant maker WD-40 warned this week as they grappled with supply difficulties. The maker of Dove soap and Magnum ice cream bars jacked up prices by more than 4% on average last quarter, the biggest jump since 2012, and signalled elevated prices will continue into next year. A similar refrain came from Nestle, Procter & Gamble and Danone, whose products dominate supermarket aisles and kitchen cupboards. We're in for at least another 12 months of inflationary pressures, Unilever's CEO Alan Jope said in a Bloomberg television interview. We are in a once-in-2-decades inflationary environment. So much for transitory and temporary inflation. Europe's top two economies sound alarm over absent supplies. An aggravating global supply squeeze caused the steepest decline in French manufacturing output since stringent coronavirus lockdowns were in place last year, and severely damped growth momentum in Germany, purchasing managers report. Gauges for factory orders in both countries deteriorated in October, with some goods producers mentioning that severe delays on inputs were responsible for contracts being cancelled or postponed. And here we go. Inflation pressures grew amid the bottlenecks, according to IHS Markit surveys. While until recently the effects of input shortages have been most apparent on prices, we're now seeing them have a noticeable impact on production levels and order books. And here we go. Winter crisis raises prospect of energy blockades in Europe. Europe's heading into winter facing an unprecedented energy squeeze, and politicians are trying to figure out how to stop their citizens freezing. If the shortages worsen, European governments could resort to curbing sales of natural gas and power to other regions. An even more extreme scenario could see them halt flows to one another, triggering a political and economic crisis. If it gets very cold, even within Europe, you will see countries say, I have the gas inside my borders and I'm going to pass an urgent safety measure that no one can export for the next 2 weeks. The European Union's gas tanks are around 77% full. That is way below what's normal for this time of year, and leaves members especially vulnerable if the winter is severe. Not looking good, is it? A little bit of good news. China's Evergrande lines up funds to pay interest and avert default. China Evergrande Group, according to Reuters at least, has supplied funds to pay interest on a US dollar bond. A person with direct knowledge of the matter told Reuters on Friday, days before a deadline that would have seen the developer plunge into formal default. Business news on the BBC. Inflation likely to hit 5%, warns bank economist. Well, that will almost certainly guarantee a rise in interest rates in the United Kingdom. UK shop sales continue to fall in September. Retail sales in the UK fell for the 5th month in a row, according to the Office for National Statistics, which technically should mean they won't raise interest rates. So you have this rather interesting factor where you have prices rising and yet demand falling. And how will the government and central banks deal with this? Certainly as far as the UK is concerned. Sales dipped by 0.2% in September, following a 0.6% drop in August. Non-food stores were hit hardest by the decline in sales, with customers buying fewer household goods and furniture. In contrast, fuel sales rose by 2.9%, pushed up by a spike in demand. US-Canada. House backs contempt charge for ex-Trump advisor, so the House has now voted to refer Steve Bannon to the Department of Justice for contempt. And Canadians hurt slipping in snow can now sue cities. And we have really, on the economic front in the US, not a lot happening. So let's have a look what's happening to the dollar. Well, it's weakened again slightly at 93.63, so down 0.13. Energy prices rising slightly. Not a lot. 29 cents for WTI crude, 30 cents for Brent. Equity markets in the US yesterday. Though the Dow was down just 6 points, the S&P and Nasdaq were both up 0.3% and 0.6% respectively. Asia Pacific overnight broadly up, but mainly under 0.5%, and European, Middle East and Africa and UK markets generally up between 0.5% and 1%. Economic news yesterday. We had the initial jobless claims figures come in at 290,000, which was better than the expected 300,000. Also, continuing jobless claims are coming in at 2.48 million, compared with 2.6, so that's an improvement in the jobs data. However, the Philadelphia Fed Manufacturing Index was worse in October, both compared to September and against expectations, coming in at 23.8 against expectation of 24.5. Existing home sales were slightly higher than anticipated in September, but leading economic indicators were lower. And today we have the market manufacturing flash PMI and the market services flash PMIs. Be interesting to see how they pan out. However, we have more important data coming next week, which we shall cover in our weekly update, which is due tomorrow. Gold has continued to rise and is again trying to attempt this $1,800 level. We shall see if it reaches it this week. It's currently standing at $1,791. That's up $4. So on the week so far, it's done really quite well. It closed on Friday at 1767. It's now 1792. So that's $26 higher so far. Silver performing better. It's now standing at 24.34. It's been as high as 24.39 today and as low as 24.02. So that's up 4 cents on the last 24 hours. And on the week so far, it's up a very creditable $1.02. Cryptocurrency market down 2% over the last 24 hours, but still well above the 2.5 trillion market cap, coming in at 2.6. And that's basically the news for today. So we have the market manufacturing and services PMIs, the flash versions out today. So they're the ones to notice. So that's it for now. Just a quick reminder, we have our weekly update tomorrow, which will cover what's happened during the week and how we envisage gold and silver prices this coming week and the factors that will influence them. Meanwhile, have a great day. Please give us a thumbs up, subscribe, press the bell sign. Until tomorrow. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.